and welcome to The Chart Show. I'm Victoria Scholar. Each week I'll be sharing my analysis on three key stories that are getting a lot of interest among investors, not just from a fundamental perspective, but from the technical analysis side of things with the charts as well. So this week's three charts are Shell, after it announced plans to move its headquarters to the UK, Tesla, which has had a volatile couple of weeks while Musk sells shares, and Vodafone, which soared to the top of the FTSE 100 following its results. Shares in Shell rallied on Monday after it announced plans to move its headquarters to the UK and simplify its dual share structure into one class of shares. The oil giant is moving its tax residency from the Netherlands to the UK, while the company's CEO Ben van Beurden and the CFO Jessica Uhl will be both relocating to the UK. Shell's chairman Sir Andrew Mackenzie said that a simpler structure will enable Shell to speed up the delivery of its Powering Progress strategy while creating value for shareholders, customers, and the wider society. A few weeks ago, activist hedge fund Third Point called for Shell to be split up into a series of smaller companies. The UK's government's business secretary, Kwasi Kwarteng, said this was a clear vote of confidence in the British economy, and UBS raised its price target on the stock after the announcement. Let's take a look at the chart of Shell, because after declining by more than 60% from the peak in January last year to the trough in October, the stock has been attempting to regain ground, pushing up to the 61.8% Fibonacci retracement level in October. Over the last 12 months, there has been an ascending trend line in play, with higher lows and higher highs. Recent price action has consolidated back down towards the 50% fib level, but still remains above, and the uptrend remains intact. In terms of key levels, 1610, the 50% fib level, is the next support level to watch, while around 18, the next major round number resistance, which coincides roughly with the most recent peak, is a key level to watch as well. A break above could pave the way for further gains. Shares in Tesla have suffered from a bout of volatility after CEO Elon Musk sold nearly $7 billion of its shares. Last week, Tesla lost $187 billion in market cap, with further declines at the start of this week. Having sold 6.36 million shares last week, Musk still needs to sell another 10 million shares in order to achieve his 10% stake sale as promised by his Twitter poll, which voted in favour of the sale by nearly 58% to just over 42%. Taking a look at the chart of Tesla after an incredible 2020, it was a more challenging first half this year, with the stock shedding nearly 40% from the peak in January to the trough in May. However, from May, the stock started to regain ground again, enjoying a steady upward trend line with high highs and high lows. However, once the stock broke above its January peak, the gains started to look parabolic, gapping sharply higher and breaking above round number resistance at $1,000 a share after it entered the $1 trillion market cap club. This month's price action has been extremely erratic. We got an island reversal technical pattern, which is where the top is separated by gaps on either side on the candlestick chart, as you can see. It looks as though the next key support is at $1,000 a share, with a break below potentially paving the way for more near-term declines. However, if it can hold above $1,000, that could spur further gains and more bullish price action once again. Shares in Vodafone jumped to the top of the FTSE 100, rallying by more than 6% on Tuesday. It reported first-half adjusted core earnings up 6.5%, beating analyst expectations, upgrading the floor of its earnings guidance as well. CEO Nick Reed said the telecoms giant had, quote, solid commercial momentum, and he said that the performance in Africa and Europe strengthened, which has put the company on track to reach the top end of guidance. Revenue also beat expectations, growing by 5% to €22.5 billion in the first half, thanks to a pickup in handset sales and a resurgence in roaming fees as travel resumes after the pandemic. Taking a look at the chart of Vodafone, we can see that there was a gap higher in a green, large-bodied or Marabuzo candle on results day. Prior to that, the stock was trading in a downtrend, which was in play since the peak in May. After the COVID sell-off in the first quarter of 2020, the stock managed to recover more than 75% of the lost ground by the peak in May, but since then the stock has been struggling with lower lows and lower highs, coming down to test support around the 23.6% Fibonacci retracement level, just north of 100 pence. But the strong earnings saw a break of the descending trend line and a continuation of the short-term gains up to around 120 pence a share as the next major resistance. If it can break and hold above 120, that could potentially pave the way for further gains.